Alright, morning ledges. How are we all doing today? I am fucking knackered. Good morning to you too. I've been up all night with these markets. Managing BTC. I've got a long in gold that you can see on the left hand side of the screen. You can see the execution there with the blue up arrow. We'll talk more about that in a minute. You can see on my stop is as well, which has just been moved into profit. And you can see where the target is, although you probably know where the target is. It's above the range highs. I had a Euro GBP position as well that I needed to watch overnight, which I'm now out of. But BTC took my attention yesterday. It was a beautiful move. I had a really nice win in that. I tried to get a second position into BTC and it didn't fill me, which was a little annoying, but the initial position worked out very nicely. But yeah, I got out of bed this morning with a few snatched hours of sleep, got my coffee, downed 2 ibuprofen because my back's killing me. And here I am. I nearly fucked off this live session today. I was like, shall I just turn up tomorrow and do it instead? But no, here I am. So yeah, quick summary of where we're at. Again, I've got a long position in gold. I'm nicely on side on it, but you can never count your chickens till they're hatched, and it is possible that this could come back and take my stop. Obviously it looks good so far, but things can change very quickly, and we've got PPI this afternoon at 1:30. Like I said, I had a Euro GBP position, but I'm not in it anymore. The big play from yesterday was BTC. I probably didn't get the same entry as most of you guys. I know from the comments I got on Twitter, a lot of people just cracked it off the LHPB. I actually waited for the first hourly reaction before getting in. I did say in the session I was going to do that. I said quite clearly, I'm not going to buy blind. I'm going to wait for hourly price action. I need to see some reaction off the level. We got some reaction. I got in. But yeah, I probably paid up a little bit higher. Not massively, just a little bit higher than where it seems like a lot of you guys got in. Yeah, looking at the comments, it's sod's law that now I've shown the position in gold that it is going to go wrong. There's a golden rule in trading, which is talk about the position before you get in and then show it when you basically got out. Don't show an open position. It's the moment you bring something onto the screen and go, look where I got in from, that it almost always turns to shit. But I wanted to show you that I am actually fucking taking trades here and not just calling them. But this trade in gold, it's aggressive, and when I got my fill on it, as much as it was a good entry and as much as I pretty much bought the pullback low, I was sweating like a virgin on prom night for the first few hours. It's a very, very bold entry, that entry in gold. There was once again very clear cut lows, and it did cross my mind that I might be getting in at a point where my stop would be very vulnerable. But sometimes you've just got to step up and you've got to take the trade. If you think there's edge there, you can't overthink things. And I did say when I took that negative 0.11R loss in gold that we covered in the previous session, I had a little breather. I had a whiskey that night and I said, you dirty bitch, I will get even with you. So I waited, as is usual for me. Waited for that time that I believed the market was moving into a position where I'd be able to strike with a high degree of probability, and then pulled the trigger on it. Let's move this off the screen though for now, because we're going to talk about gold in a bit. I want to cover Bitcoin first. A lot of people saying, what did you do in Euro GBP? Don't worry, we'll get on to that. We've got plenty of time because I can't see anything else setting up this morning. I probably won't be mentioning bunds much today, which I'm sure will please a lot of you, because I can't see a lot in there at the moment, and I think I'm going to have my hands full focusing on this gold, especially if I'm not out of it by this afternoon. There might be an additional entry into gold. I'd like to get more into it if it looks right, but also if I get stopped out and it then starts to really collapse to the downside, might even potentially look for a short. But I mean, all that's on the cards for later in the session. So yeah, again, I apologise in advance because I'm going to sound a little bit tired today, and that's because I am tired. So this is going to be a really fucking fun 3 hours to sit through afterwards, with all these pauses and me talking at a snail's pace. Although a lot of people have said to me, can you slow down when you talk? Can you explain things slower? So there you go. You're definitely going to get that today. Were you not worried about the FTA on Bitcoin? I was concerned about it. I was watching it. But because we had that potential for inside day failure, there was a bigger target in play. It wasn't simply one level to the next on the hourly chart. There was the possibility to get in and then play it for that bigger move. But you've got to be concerned when you have a series of lows like that, which again we will do a deep dive into very shortly. I'm still reading some of the questions. Yeah, it looks like a lot of you got that BTC trade, so well done. From watching your trading course videos, you've certainly sped up talking. Yeah, well, sometimes I forget that there's a lot of people that are watching that really aren't that familiar with how I trade. I always just come in with this default assumption, because I've been teaching for so long and I know so many people are familiar with how I trade, that everyone's going to know what I'm doing. So just go through it all quickly, get to the point. It made me laugh. You know, how many people on Twitter yesterday were like, he just pulled up a chart for a few minutes and just drew this level in BTC. But I mean, this was a very, very straightforward trade. Very, very straightforward. You don't have to be a fucking rocket scientist to know this was going up off this level. Let's get this box off the chart. We'll redraw it in a minute. Let's take ATR off as well. So if we remind ourselves what we were thinking, what was the premise for this trade, and then I'll review how I actually played this out. So the weekly, I joked about this and said it looks like shit. It does. Look, maybe there's other traders out there that would look at that weekly and say, oh, I've got a clear feel for where it's going. I have absolutely no problem saying, based on just that weekly chart, I haven't got a fucking Scooby where that is going. You don't have to have a bias on your weekly chart. It's the highest time frame chart I look at. Some people ask me if I look at monthly charts. No, I don't. Weekly is the highest I go, but I just don't see a lot on that specific chart. And really this trade came alive for me when I came down to the daily time frame. And what I saw on the daily time frame, and the reason that I thought this looked like a very nice trade, was you saw the support low here from the 15th of August, and then you saw the swing failure of that on the 5th of September. And if you go back to previous sessions in EFL, I was saying at the time that even though there was that swing failure there, and on this daily time frame there was a case to be somewhat bullish if you just looked at this, for me, I was concerned that the day after the swing failure we still weren't able to get out of these lows to the left, and I said on that day that I was really looking for it to explode higher and then potentially buy a pullback. But while we were kind of struggling at these lows, that I wasn't really interested. You see, the day after the swing failure, we've just traded up. We have obviously cleared these intraday, but there was no clear breakaway, and then we'd sold off to the downside. And then I had my eye on the low of the swing failure and the fact that we were hovering underneath it. Now again, I wasn't bearish at that point, but I've just got that as a frame of reference. And then what we had here on Monday was an explosive move up that got above the last low pre-break. And again, this is a series of lows. The last low pre-break is coming in there, and we clear that violently. And that was where I thought, this is now looking bullish. If you have a key support area like this on a higher time frame, which here we have the daily, and we move up into that area and then push through it aggressively, the market will usually come down and it will retest that last low pre-break from above and have a very, very high probability of reacting to it from the other side and going on the next leg higher. So what I did here is I had my eye on that level, but I also knew that there was a little bit of a zone there, which is why I drew a box. So the box essentially started right at that last low pre-break, the last point at which we found a little bit of support before breaking down, and it extended to the high of this candle where we paused just before that area, and that was my zone of engagement. What made that even nicer, as far as I was concerned, was the fact that we had an inside day. Now, you still could have looked to engage down there even if you didn't have an inside day, but because we had an inside day, I knew that there was the possibility that we would take the lows of the inside day, trade into this area, and then if we get above the low of that inside day, we have inside day failure in play, where shorts get trapped underneath the lows and the market moves up through the range and takes out the inside day high. So there was quite a few things coming together there to frame that area as key and to frame the target up here. So what you want to do in a situation like this, and what I did, is of course have your area marked out that you want to engage in, but you want to keep your eye on the inside day low, because that's going to be a very important reference point for your target. So now we come down to the hourly, and this is what it looked like. And here we had the move up that we initially discussed. Here is your rounded retest. So there's time and space between the break and the point at which the market comes back to it, which I've said is very key to me. Here is your LHPB on the hourly time frame. So that would be the point in most cases that you would put a bid in. Normally, and this links most of my trades, I'm going to come in at the LHPB, just sitting on the bid, and put my stop beneath this thrust candle, which in this particular case you can see worked very nicely. However, here what I did was a little different. I said to you guys in the session, I'm not going to put a bid in at that LHPB. I'm going to watch what price does and look for a little bit of confirmation, look for a reversal on the hourly chart before engaging. And the reason for that was that if I'd put a stop below the low of that thrust candle, I was essentially stopping out right into the low of where I've drawn the range, which is not what you want to do. You don't want to stop out at a place where you can look on the chart and still consider yourself in a bullish scenario. So I didn't put a bid in, and I certainly had my eye on the inside day lows. And you can see that the last low pre-break here, the wick of this candle, is just a fraction beneath that inside day low. That's the point which you have to watch like a fucking hawk if you're long this. But because we've got the inside day failure in play, your target is going to go one tick above the inside day high up here. Now, I actually went just above this high because it was the swing high on the daily chart, and it's not a massive amount of difference, but that's what I was going for, one tick beyond that high there. So the rest is history. We move down into the level. Note the aggressive move down into the level, exactly what you want. It breaks the inside day low. You're going to have a lot of longs puking beneath the inside day low, shorts initiating. Remember the story of the guy I've told you in prop that would always initiate on a momentum trade on either side of a inside day break. So it moves down into the level. We get the hourly candle form, and there's our sign that the market is reversing. So the way that I framed this trade is I came in as it broke this candle high, and I put my stop just underneath this low. So when I set the trade up, it looked like this. Now, I was watching this very, very closely. If we'd have moved up into that and we'd shown signs of rejection there, I would have wanted to have got out of that trade. Now, you have to see what kind of rejection you're getting. Is it just pausing there, or is it actually forming sort of a long rejection wick and you're getting something like a shooting star? You can't tell because it didn't happen. But all eyes were on this level, believe me, because when you've got an inside day low, you want to see us get back above it quickly. And if it does, that's a very, very good sign. You'll see I took to Twitter when the market was around this price point here, and people were sending me screenshots of their trade, and I was saying, hold this now. You've got the market by the balls. Hold this for at least the inside day high. There is no clearer sign that you've got the market by the nuts than this price action here. Comes off a cracking level, shorts are trapped, acceleration through it. You've got to hold your nerve on a trade like that. Someone said to me they'd been scared out of the position and they were asking me whether they should re-engage here. That's exactly what I tried to do in terms of adding to the position. When we moved up through here and stalled just underneath the inside day high, the market hadn't finished forming the daily candle, but it was looking like this. Now you've got a hammer with inside day failure in play, and so the higher time frame is screaming that this is going to run the range highs. So what I did is I moved my stop up when we were up here to underneath the low of this thrust candle, so I had a profit stop. The reason I moved it under that thrust candle is because we'd broken resistance highs. That's usually my criteria for moving a stop if we start breaking structure in the direction that I'm placed. So the stop came up under here, and then I rebid this high for a second position, and if I'd been filled on the second position, the stop was the same. As it was, it didn't fill me and it went straight to target. So I had a really decent winner on this. It was a bigger R trade than I've had in quite a while, actually, because my average R is between 1 and 2, but this was exceptionally good, and it's a shame that it didn't pull back to give me my second entry, but you can't get everything you wish for. So again, there was a lot coming together there, but principally you can see how I've framed the trade on the daily time frame ahead of time. Before it came into this level, we were marking it out. We knew what we wanted to see, and we knew where we wanted to see it. We knew we wanted to see price action that was bullish, that confirmed the bullish thesis off of this zone. That's exactly what happened. We also confirmed ahead of time where our targets are going to be. So again, if there was an inside day, then there was the potential for inside day failure, and we would be able to frame the trade with a target of the range highs as opposed to this last low pre-break. So after that trade call right there, I imagine a lot of people are now saying, give us another one in Bitcoin, which is now going to be difficult because I don't see anything that I like on this chart at all now. I think it's difficult now to say with a high degree of certainty where it's going to go. You could certainly look at the hammer from yesterday and you could say, well, that looks somewhat bullish, right? Yes and no. I mean, it does definitely look somewhat bullish, but somewhat bullish is not good enough for me to want to engage. I have to trade when I have absolute conviction that the market is going to react from a level and that there is a clear target for price to move to. And I don't have that here. Now, if it was the case that we moved aggressively up from here, then there's every possibility that I might come in and bid a high like this in a future session. Because again, if we get a spike and we move away, we know there's a high probability of a reaction on a pullback to it. But that's not for today. I need to see the clean move up, at least for today, to even think about buying this area tomorrow. So I can see right now that based on the swing strategy I'm trading, there's unlikely to be anything here for me to do. And that is all I can really say on BTC at the moment. Would it be valid to short it now and wait for the box retest? Well, it depends what you mean by valid. If you're asking me whether I'd take that trade, no, I wouldn't touch that with a fucking barge pole. That's not to say that it won't go down there. It could do anything. But I don't see that that's clear. I know it's hard when you're learning to fully understand what I mean when I say this has to leap off the screen at me and it has to say, Tom, if you don't take this trade, you're a fucking mug. And I said this in a previous session that what's always helped me is coming in with that philosophy of, I don't really want to take risk on. Show me what you've got though. It's an advert. The market's always advertising. Show me what you've got. And maybe if you really sell it to me and I really feel there's no way that I can refuse, that's such a great offer, I'll take it. Where would my conviction come from that this is going to undo yesterday's up move and come back to the box? I'm not saying it can't do that, but why would I have that conviction? Where would you get that from in price? I personally don't see anything that fits my criteria to come in here and be very bearish. So let's move on from here and discuss Euro GBP. So Euro GBP was an interesting one. First off, you can see back on the weekly chart that we had this weekly high, which was an inside week high. So I had my eye on that. I also noticed over to the left there was clearly a fairly good resistance at that point, and we had hit that multiple times, and of course we had the last low pre-break coming in just above it. Now I'd initially thought that we might get a reaction to the downside there. That was the kind of trade that I was thinking of. I'm sure that we mentioned it as well in the Thursday live session, and I drew a level there and I said, I bet we get a reaction from that. So with that in mind, did I trade that short? No. Why? Because look at all of these highs just before it. You are in danger of getting in at a price point where there's just no room for price to go before you run into potential difficulty, and I don't like those sorts of trades. So that's why I didn't short it there. When I saw it explode up and out of here, going back to the trade idea from BTC, I thought there's a high probability that we'll now react at this level from the other side. So I took this trade late in the session yesterday and put an entry here at this high. I put a stop underneath this thrust candle. Again, you'll see that that links all my trades. And I put a target of a return through this high. So you can see that this is a fairly low R. We're just looking at a little over 1. My average R is higher than that, but as long as the R is at least 1, I will take the trade because I know I have a high strike rate on my strategy. That's how I set it up. Now, this trade was bold, and the reason it was bold is because there was an inside week. And we know that inside weeks you can get trapped on, and you can get that failure. So that doesn't mean you should be scared of taking a position when we break with momentum one way out of an inside week or an inside day if the level's good. But you just have to be quite proactive with the management. And I was also very aware that coming into today, we have the ECB interest rate statement and the presser as well. So essentially, this had to fucking move relatively quickly. Now, it was obviously never going to move massively at that time of night, but oftentimes on a trade like this, even at this time of night, it will drift into profit. You're on side in the morning, and then you're looking for it to potentially even run the highs before the news comes out, or at least get close to them enough so that you've got a protective stop in place. This is what I was looking for here, and it didn't happen. I got filled, I got a small move up, and then look at the high of this candle, the 8 to 9 p.m. candle, right off the level. And now there's a bad smell in the room. I've got long at the weekly level. It can't fucking get out of the daily level. Now, that's not a reason for me to just get out of the trade. It's a reason for me to be on alert here. And it then moved down here. And at this point, it's very near to stop. So what I did is I put an offer in to get out of this at this low on a pullback, knowing that that's the price point where a lot of traders, including myself, are trapped from. And it moved back and it filled me. So that was a very small loss, but it is a small loss that's going in the books because, as you can see, it was lower than entry. That's usually how I will manage a trade like that. If I feel that I'm trapped, then I will be on the offer trying to get out if it's a long position like this. Now, some of you might think I'm just trying to cover every contingency just in case you are thinking this. What about when it's down here? Do you not just want to say, right, fuck this, I'm getting out now? No, that's not how I trade. When we came down here, I was fully prepared. If this goes to my stop, it goes to my stop, and that's the way it is. On this candle here, which there's quite a wide wick because of the spread widening, which you always get in the 10 to 11 p.m. candle, you just saw that it closed on the very last high pre-break, the high of this rejection. So at that point, I still thought there's every possibility that I'm actually going to be able to get filled and take a small loss on this rather than the full loss, and that's why I waited for it. And of course, I know some of you will be thinking, why not just move to break even, Tom? You fucking muppet. You'd have got break even as well. Look at that candle. Went straight back to where you got in. You could have got break even. You didn't need to take a small loss. Well, fuck you. I took a small loss on it, alright? That's how it goes. Fuck off. So that's Euro GBP. Again, with that type of trade, at the risk of repeating myself, you just have to be very, very careful. You know there's the potential to be trapped at a point like that. Doesn't mean you should be scared from taking the trade, but it does mean that if you get a sign that you're trapped, you don't sit there like a rabbit in the headlights and go, oh, I hope this comes good, otherwise I'm really going to fucking do my arse. You've just got to get out. There's no hesitation. I didn't sit there for 1 minute, hand on heart, and think to myself, shall I just try and get out at break even so I don't have to take a loss? It's like, no, this is the last low pre-break. That's where I'm getting out. Put the fucking order in. Yes, it's going to be a small loss. I don't care. You just need to get out. I remember they gave us an exercise in prop, actually, many years ago, which helped with quick decision making. And you'd be trading your account, and the boss at the firm would come over and he'd lean over your shoulder and he'd enter you into the market in a trade. And just look up at him like, what the fuck are you doing? And he'll go, so manage it. And what he wanted to see you do is close it immediately, because you shouldn't be in it. Some cunts just put you in the market. You go, well, I don't want to be in this, I'm getting out. What a lot of people would do, though, is they would suddenly think, do I want to be in this trade? And maybe it's now gone a couple of ticks offside, and they think, oh, I don't want to take a couple of ticks loser just because this fucker put me in it, so let me try and get out of this for break even. And sometimes where they could have taken a tick loss, it would develop into a sizable loss. And that was his way of trying to train you in the art of, if you make a mistake, if you see something you don't like, get out very, very quickly before it's too late. Don't hang around thinking, what if this comes good? So the question of, isn't that a rather tenuous rounded retest with not much time and space between them? Listen, mate, I'm doing the trading here, alright? No, it is. You're right. There's not a lot of space between the break and rounded retest. That's okay, though. I only have one specific rule on the swing strategy, which is that it cannot be the next candle back that I get filled on. So as long as there is more than one candle before the break and the fill, that's fine. In this case, this is the breakout candle, so I can't see it back on this one. It's a quick pullback rather than an example like in BTC where it's more rounded, but it's still valid for me if the level's good. So should we go on to gold? I'm not convinced this gold is going to work, even though I am on side, and the worst it can do to me at the moment is give me a small profit. Well, that's presuming I don't get slipped, actually. I've got quite a decent position size in this. Right, so we've been over this many times. This fucker's just thrashing around, and I am doing my utmost to get it bang in the middle of the range and play it for the range break. Again, range highs here, clean lows on the cash gold chart. The reference point that I've been trying to draw your attention to is the high of this hammer. Drop down to the hourly. Remember, I came in and shorted this here, so when we broke beneath this and came back to it, I'd shorted it at the low, and I very nearly did my fucking conkers on that trade. Now, that's an exaggeration. I got filled, I had to stop above the spike. I was looking for a big run down to the range lows. I really thought I had it by the balls here, and it ended up stopping me out above this spike or shooting star high, so that was a small loss. You'll see by now the prevalent theme of small losses. If it doesn't look like it's going to go, then I want to just get out the fucking way. But there's a fine line between it not looking like it's going to go and you just sitting there shitting yourself because you're a few ticks offside. You've got to have a valid reason to say this isn't going to go. And for me, you know, I've got 2 hours reacting to the low. I've got a shooting star here that closes down beneath the hammer high on the daily and down beneath this swing high here. Then a thrust candle to the downside. In my experience, that should have pulled back to the low of that shooting star and then shat itself. And if it doesn't do that, something's wrong. I got to get the fuck out of the way. That's how I operate. Act first, ask questions later. Get out of the way before someone tries to take my money. Now, at any rate, you saw that we moved up yesterday, and we've again stopped right at this fucking level and started to pull back. And CPI comes out yesterday and it collapses. and I made the joke, can the last person long turn out the lights? My entire feed was bullish gold. So I actually thought on this candle I might have to end up shorting this. The plan was still the same as I've said to you in previous sessions. If it broke this low, I'm going short on a rounded retest. And I thought that was a possibility on this candle. I really did. So then we come down and we just stop with an inside hour just ahead of the hammer high on the daily. Then we move down, make a new low, and we've got inside hour failure and a hammer. That really is showing strong support from the buyers and a reluctance for this to go lower, and it's all happening off a key higher time frame level. So what did I do? Of course I fucking waited. It's still not enough. I'm so fucking patient, and I don't care if it goes without me. It has to look right. So I sat there and I waited, and then we get this thrust candle, and when we get the thrust candle, then it's game on. And at that point I came in and I stuck a bid here at the high of the hammer for a pullback to it, and I put my stop beneath this low. I watched this overnight. It went nowhere. I didn't really expect it to, but when it broke up and out of this minor swing high at 4 a.m, I've got my stop up underneath that. Lot of lines being drawn on this chart. There is every possibility I am going to get stopped out of this. You can see that it is coming for the stop now, and again, if we just pull the account onto the screen there, you can see that's where the long position was at the head of the hammer. That's where my current stop is, and the target is the green line above it. So Marco is saying, so you do move stops to break even. Marco, get out. You're going to have to get out. Nobody's moving any stops to break even. This is a structure-based stop. Look at what I've taught. It's a thrust candle through a little high. The stop goes below. Oh, wow. Coincidentally, it is almost break even. Fuck off. Get out. It's true. And what's the worst thing that can happen for my reputation and credibility here is that it comes down and stops me out, then goes to target, and everyone says that's why you shouldn't have had a break-even stop. If that happens, I'm done. EFL's over. I'm out. I'm not coming back. You won't see me again. So when I look at structure here, and I know there's a lot of lines here and there's more colours than a gay pride parade, but I am seeing this high and seeing that as last chance saloon for the market to react to and move up through these highs. And if it doesn't react here, then I'm probably getting taken out. Sangam says it will knock you out and go. Listen, man, I'm going to knock you out and go in a minute. Okay, so there's your gold. Just keeping my eye on Euro GBP. I usually do just follow up on trades that I have been taken into and out of, just to see where they go after and if there might not be another potential trade at some point. Because obviously you've got to get even with the market, right? If it takes you out for a small little loss, like gold did, you've got to get even. You've got to show that little bitch who's the boss. But you've got to wait. You've got to get revenge in a calculated manner. They say revenge is a dish best served cold. Think about how a woman gets revenge on you. I don't mean to be sexist here, But get on the wrong side of a man and he punches you in the fucking face. Get on the wrong side of a woman and she'll kill you in your sleep with poison that she gave you as a loving cup of tea before bed. Oh, I've met some great women in my life. If I get stopped out of a trade and I think the level's good, then I really just will stalk it for the next setup, and I will, in my head, frame it as I've just lent the market some money and I'm going to be getting that back and interest on that money, but I've got to wait. When you loan someone money, you don't get it back 5 minutes later. You just got to wait for the market to maneuver into a position where you can take your money back. I never understand why people go fucking crazy and go on tilt. There are so many opportunities to make money, but give it time. If you lose it today, you don't need to make it back today. You know, people are acting like they've got to fucking draw their money out of the account tonight to pay the rent. Just relax. Doesn't matter if you get it back in 2 days' time. Just wait for the market to maneuver into position and stop going on fucking tilt. This will be a quick in out like my sex life. Sangam, man, you're full of jokes today, aren't you? Listen, pal, just let me do the jokes, okay? What are you going to do if you don't see any reaction to this level? Well, I'm probably going to get stopped out. That's the easy answer to that one. If it doesn't react here, that's taking my stop in all likelihood. I mean, look, we could draw a little box and go, there's the high, and there's the very last rejection high, but I mean, you don't need a fucking box to know this is the last chance. Certainly for my stop, that is. But hey, if it stops me out, I'm now at break even, right? And then I'll be on for trade number 3 for this week in gold. I will nail this little bitch. Mark my words. I will spank it like a... Okay, I'm going to stop now. What's it going to take for me to cover the dollar CAD? What do you want to see in the dollar CAD? Oh, you want to go over yesterday, right? I've got to move this off the screen, have I? You lot are so demanding. Dollar Canadian. Yes, it's a great level. You'll start to see the theme among a lot of my trades. Thrust candle to the downside. Where's the last low pre-break? There. Come down to the hourly time frame. Where did I short it? Friday last week. Just above the last low pre-break at this spike candle low with a stop above the high. It was coming into that level very aggressively, which is exactly what I want to see. It was past ATR, it was late on a Friday. Then we break out of that, and what do we know about these breakouts? When you break out violently of a higher time frame last low pre-break, it will come back to it, it will key off it very precisely from the other side. So what do we get here? There's your break, there's your rounded retest with space. Where's your last high pre-break? It's right there. That's where your last little bit of rejection came in before the market broke to the upside. Could you get in there with a stop beneath this thrust candle? I think that looks fucking tight. This would be a better place stop, which you could come in and say, well, I don't want to put it under that, just literally 2 pips beneath the key level on the daily. But I could move back and see this thrust candle here just broke a little bit of the early morning structure. It just gives you a little bit more room. And where would your target be? It would be new highs. One level to the next. There's no really clear level in here, so you just be taking profits a pip beyond the extreme high. That was the trade. Did I take it? No. Why did I not take it? CPI. You cannot do any size over CPI. Your question, French DNA, what's wrong with using 1/3 the size if you expect 3R slippage? Mate, it's like saying what's wrong with using a condom if you know the girl's got syphilis. Did you like that analogy? Dollar yen. Yes, let's look at dollar yen. I fancied this yesterday for a potential long. I was eyeing up the price action, didn't really get anything that I wanted, and obviously, I have my hands full with BTC as well. But I did like this dollar yen. I certainly was watching it because of these lows here. If you look at the daily, you'll see that we've got inside day failure. The inside day low was there. So we flushed these lows. That's your inside day. And what you can see is that intraday, so at 1 to 2 p.m. candle yesterday, we break up and out, and we're now back within the range of the inside day, and we've got inside day failure in play. So as soon as that happened, I was watching it quite closely, and I was watching specifically this candle high here. Now, if there had been a very clear thrust candle through that meant I could put a stop beneath it with a fair degree of certainty, I would likely have taken that trade if it had been a rounded retest. As it was an immediate retest, and you can't put your stop underneath that because you're stopping out right into the fucking range lows on the daily chart that we've just drawn. So I thought to myself, well, I'll watch and see what develops there. Do we get some sort of reaction at that level? We didn't. We closed through it, back down through the range lows, and then I just lost interest in it. But it might offer an opportunity. So where would the opportunity be in this? So I'll tell you right now what I'm looking for. You probably already know. Here, right off that high. You want to see, in an ideal world, a strong close today. So you've got your thrust candle up, but you don't want to see it take the other side of the inside day today. Why not? Because that's going to be our target to frame a trade back to this area. So you don't want to see it go right up through there. You want to see it close strong today, and then we'll look for a pullback into this area. Now the problem with this area already is that even if we did close up here and we come back to it, I can't stick a bid there based on the way I trade because it's not naked. So what would I do in that type of situation? I would refine it to this high. This is currently the last high pre-break, and then I would see if we get a pullback into that. But I will know that I want my stop beneath the hammerhead on the daily here, which precludes, as you can already see, putting a stop underneath this thrust candle, because that would essentially be straight into it. So it needs to go lower than that. Where could it go? I would actually be happy running a stop underneath this candle that just broke this minor little swing high. Now you might think there, what? But now your stop's right into the daily. The difference is that I am of the opinion that the market is finished with this level now. But I wouldn't be of the opinion that it's finished with that one. And why would I think it's finished with this one? Because when you have a spike candle like this, a hammer, what you will often find, I'm sure I mentioned this in a previous session, is that the day after it, we will pull back to test the low of the day prior to it, and will oftentimes react from there. You can see that's happened on the current day. And if you go to the hourly, you can see the wicks on the candles here. So this was obviously in the overnight session. It's pulled back, reacted from there. I think it's finished with this now. But I don't think it's finished with that one necessarily. So the trade at the moment would look like buying this high on a pullback if there's a rounded retest with space, looking for it to target 1 pip above this high up here, which is the high of the inside day, and running a stop underneath that candle. It's very early days because we haven't even closed out of this level yet, but just to give you an idea of what's already percolating in my mind, it's looking like that. Now, that's just over a 1R. I mean, it's not fucking setting the world alight. But I'd still take that trade. I think it's very high probability. And remember that this isn't necessarily where we will get in yet, because although this looks like it's the last high pre-break at the moment, we don't know what it will look like by the end of day. And it's possible that we could come back down to this level, fully test it, then break up and out, and then we might have a slightly lower last high pre-break. And that would slightly change the risk-reward dynamics. Might even be possible to have a slightly higher stop as well than down here. For example, if it reacts back to this level and then puts in a low somewhere here and then pushes up through there, the stop might tighten. So the R could change here on this trade, but I start out thinking about the trade a long time before it happens. The entry is always going to be last high pre-break for a long and last low pre-break for a short. That is a standard entry for me if I'm trading a break and retest of a level. What you haven't seen me do yet is take a entry at market, which is what I'll usually do when there's an SFP. I don't trade SFPs very often. A lot of people ask me about SFPs. I get a question quite frequently, which is, have SFPs stopped working, man? Because I can't make money in them. And I'm like, you've got to be careful with SFPs. You've really got to be careful. I've never seen anything that I've put out that's been more misunderstood than the SFP. It's not hard to spot one. It's hard to spot the type of one that I would trade. I'm super picky with those. There are SFPs all over the fucking place, and most of them I ignore. They've got to be major swing points for me. Major points where I feel people are trapped, or key swing points intraday into a higher time frame bias. SFP is swing failure pattern. So a bearish swing failure would be break above and close below previous swing high. Bullish swing failure would be break below, close above. I mean, a good example is this. This daily candle in dollar yen is an SFP. It's broken below these prior lows. It's closed above. The basic trade idea of a swing failure is that it's failed at a swing. And what's relevant about a swing is that people put their stops beyond them. So traders get caught initiating shorts in line with this downtrend, puking longs when they hoped this support would hold and it didn't, and then we gravitate towards the nearest decision point again. What I mean by decision point is I try to get in and out at points where traders make decisions. So, even with this dollar yen, this could be a fucking major low for weeks for all we know. Why am I just getting out there? Because that's another decision point. If it goes up there, it's a higher time frame inflection point where higher time frame traders are keying off to make a decision, and that's where I want to get out and then see what price does there before then making my next decision. So this is on the cards for dollar yen. I'm just going to change that to a daily level because it's the high of the hammer. And let's put this as a daily as well because it's our next level on the daily. So we're now looking like that. Okay, so we're 40 minutes through the hour. So far, that's a positive response to the level in gold, that the hour hasn't concluded yet. But again, you can see the importance of marking out these last high pre-breaks. Try not to have any emotional reaction to it at all. And a lot of what helps me with that is I'm a natural pessimist. I'm the kind of cunt that you're going to come to and say, I've been doing really well, Tom, I'm super excited, and I'm going to go, yeah, well, give it a few more months and come back to me, mate. And you're going to go, oh, you're so fucking negative. But I've found, particularly in the market, that keeps me in check. I'm looking at this and thinking, yeah, we've marked out this LHPB. I said I wanted it to hold here. It's holding. Yeah, that looks good. But I still might get fucking stopped out on it. Could easily happen. Let's just see. When your emotions run you, you just can't execute. You're fucked. There's 3 things guaranteed in life. Death, taxes, and that there's going to be a trade coming along. So if you get stopped out of one, just wait for the next. Everyone wants me to look at the Kiwi. I said on Twitter yesterday, I hate that fucking pair. I think I said in the first episode of EFL, Aussie dollar, that's a great market. Top performer for me. Kiwi, right at the other end of the spectrum. Never makes it easy on you, the Kiwi. And by the way, this will make you laugh. What's the pair that's almost as bad as Kiwi in my performance? Oh, there's a fucking surprise. It's Euro GBP. Should a trader stick to trading one market? That's a really difficult question. Really, really difficult question. I don't know how to answer it because I started out trading multiple markets. That's what I've done. I only graduated to really looking at one market when I was already a long time into my career and had been making money. And then obviously that one market is the Bund, which I then call my focal market, and then I look at everything else for these swing setups. But you can argue this both ways. You really can. In prop, they always said it's best to start off focusing on one market because you can watch that thing and you can get to know it inside out and back to front. What times does it move? How does it react to certain bits of news? What's its average range? How much of the time does it return to the open? How much of the time does it fill an open gap? And it's much easier to concentrate on one market and keep all those stats and know it inside out and back to front. So they really only wanted you to trade one market, maybe look at a second one for correlation purposes, or a second one to trade if your main market had just really dried up or it was a really shitty day. You could have two. Obviously, when I joined, they said to me, well, what market do you want to trade? And I'm like, what? I've got fucking 20 markets I'm looking at here. And they were like, you what, mate? No one's trading 20 markets. And I was like, I am. And here's my statements. So the guy had a fucking hernia because he had to give me limits in all these markets, which ties up a massive amount of margin, which he used to remind me of all the time. For me, there's always a focal point. And when I look around, sometimes I see there's nothing to do in my main market in, say, the Bund on a certain day, but the action's over here in Bitcoin or the action's over here in dollar yen, and you can't look at a huge number of markets. And I wouldn't be able to cope looking at like fucking 30 or 40 different markets, but I've got very used to the markets I trade. And from my perspective, you look at a day like yesterday in the Bund where I didn't see anything that I liked. And what, I'm going to miss Bitcoin? I'm going to go, no, I only trade one market, sorry. I need to keep my eye on a lot of different markets. And if something's setting up in one of those markets, I'm in, and that's my focal point. But it isn't for everyone, and you do have to work to your strengths because, you know, a comment I get a lot of the time is, Tom, I can't focus on 20 different markets. It's really difficult for me. Well, then just trade one. And if you can cope with that, then pull on a second one and see how you cope with that. Gives you a little bit more opportunity. If you're coping with those, fantastic, and you find there's long periods where you're sitting on your hands, bring in the third market. The thing is, there are some markets that you don't get anything in for ages, and then they give you such an incredible opportunity that it can make up for the long period of time that you've not had anything in it. As a primary example, look at dollar yen. You can get long periods of time where there's nothing to do in this market. You know, days go by when it's not on my radar at all. But when you see this, when you see a level that big and you see the market tank into it, that's your fucking time to step up and take dollar yen. How can you not be bid there? How can you not be bid at that level? How can you not be offered up here? Weeks might go by where I barely even look at the thing, and then suddenly it's like, this is it, and this takes precedent over everything. Yeah, I did miss it by a fucking 0.4 of a pip. Thanks for reminding me. You joined late. What's the gold trade? I'm long. I have a stop underneath this candle, which is a very small profit stop, which will essentially make me break even on the week in gold. I'm going to add more if it breaks that high. That's when we've really got it by the fucking nuts. If it breaks that, and we come back to it with a rounded retest, I'm all in. Look at the state of this bund. That's not to say there's not levels in it, but what can you take away from this bund at the moment? You could look at it and you could say, well, it looks like it's drawing towards this high. On the daily time frame, it's stalled ahead of there and wicked. Is there a really clear area on the daily time frame that stands out like a sore thumb? Nope. Are we past ATR so we can start thinking about potentially levels to trade? No, we're in the range and we know we've got massive news coming out later. I don't even want to really start to frame a trade until the news comes out in this case, because it will be big for Bund, and then we'll start thinking about it. Now, that doesn't mean I haven't got my eye on this. Last high pre-break on the hourly, past ATR, interesting. You've got that just above it, this spike low and these highs over here, so there's already only 12 ticks room in that. But yeah, that's certainly something we can think about. If you have a look at that, that level has been retested on the 5 minute. So I wouldn't be able to sit there on the bid. You could move it to there at 51s and put a stop at 47s. So there could be a 4 tick stop there. But it's a long way past ATR and we've got time to deal with that if that gets down there. But yeah, that's cooking in the back of my head. Potentially buying 51s, aiming for these lows. Although the Bund is the market that I trade on the short-term time frames, doesn't mean that I'm flying around in a frenetic pace, steaming in left, right and centre. I still want absolute conviction when I trade. It has to leap off the screen, and I'm just going to keep saying that because it really does. I will sit here and I will wait and I will wait. In my trading plan, which I wrote back in the day when I was at Futex, I decided to start it off with a quote from Mark Weinstein in Market Wizards. And if this quote doesn't sum up exactly how I fucking trade, then nothing does. And the quote is as follows: although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure it can catch its prey. It may hide in the bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, but preferably also one that is sick or lame. Only then, when there's no chance it can lose its prey, does it attack. That, to me, is the epitome of professional trading. Right, that quote really, really resonated with me because that's exactly what I do. I just wait and I fucking wait some more. And I don't give a shit if I miss it and it moves without me, it's on to the next one. But I'm just waiting because I see this as competition. These fuckers out there are trying to take my money. Now, why am I just going to suddenly steam in and let someone take my money on an ill thought out trade if it goes wrong? I have to be as certain as I can be that it looks right. People sometimes say to me, but how did you build your accounts back in the day when you weren't trading so frequently? You know, you were trading this style. If you get 3 or 4 trades a week, how can you build your account? The personal route that I took, which any of you guys can take, is to just submit to the process of building a small account and then get capital from someone. Don't worry about the size. Trade small. Trade small, just show consistency. Get 6 months behind you. If you can make money trading, money will flow to you from outside investors, and then you can leverage off of that. It's their money, it's their risk. I'll do that for a few years, and then maybe I'll leave them behind, take the pot and trade on my own. That's how you can grow. Oh, right, what's gold doing? It's a little reaction. A little reaction off this LHPB. Dollar yen still holding. You're not expecting too much because we've got PPI at 1:30. It's going to be a busy afternoon. John Allen in capital letters. Tom, there is a fucking trade on New Zealand dollar. Well, John Allen, you better take it then, mate. In caps. I fucking have taken it. What a ledge. Let's draw a fucking box on the screen, right? Right. There's your support lows. We've broken up and out of there. That's way down on the chart, so we don't have to really concern ourselves with it. What we have got is the market moving down, not keying off any real structure over here, but has flushed out a recent low with inside day failure. It's broken the high of the inside day failure hammer candle and is immediately rejected. This is your low the day before the hammer candle, so that is definitely a price point to watch if you are bullish. The reason I didn't enter this at the LHPB is, where do you put your stop? You put your stop under that thrust? Well, you've just stopped out into the fucking level. And now look at it bouncing off of here. So you've got to watch the price action. You've got to see what it does. This is why I didn't steam in with BTC yesterday on the bid. I had to wait. I had to wait and look at what that price action does. So right now, quarter of an hour through the hour looks alright. Let's see where that is in 45 minutes, mate. I hope you get a winner, obviously. What would it take to get me into this pair live in front of you? It would take this candle closing as a hammer. It would take a thrust candle occurring after it. And then I'll probably bid the hammer head with a stop beneath the low. That's what it will take. That's bullish price action. If it does that, yeah, I'll probably crack it. But good on you, mate, for steaming it in and telling us all. That's commitment, that is. All in capital letters as well. I'm fucking in. Now, have a look at this. See these hourly highs? It's the swing high on the daily. Look how far past ATR that level is. Look at your clear thrust candle for a stop. Now that's a fucking trade. What do you need to see to run a trade past FTA? The FTA is time frame specific. So if you look at BTC again, we spoke about, if you get long here, this is the FTA, which it is on the hourly chart, but the FTA on the daily is much higher, and the daily is what we're framing our trade around. So if this inside day hadn't existed, then this would be the FTA and I'm out. There's no daily bias. It's just a question of get in once the price action's formed, get out there if the risk reward is good. But because we had the inside day, we know that shorts might be trapped underneath it, then the bias changes and the FTA's up here. As soon as I knew I had this by the fucking nuts, I just wanted to get more in, and I wanted to get it in there. But it didn't pull back. Dollar Swissy. What do you like in dollar Swissy, mate? It's breaking a range high. Yeah, okay. LLPB at 86.17s. It's a long way away, but yes, you've got a swing low on the daily. What's that low there? So that's the low of this shooting star, and it's right over the top of it. Yeah, that's a very nice level. Are we going to get up there today? That's quite an extension of ATR, and I'm not sure we're going to get there, but I like it. It's very nice. You could come in there, by the way, and short it off that low. right there, just ahead of the level, which is as close as possible to where you're wrong on the trade, which is what you want, and then put a stop above that thrust. I thought you were talking about a break retest of this level. You see all these highs here. A lot of people that have studied my material would go, are you not going to buy that, Tom, on a rounded retest? And it's not a bad level. It's very clear cut. The problem is there is all that potential to be trapped because it's such a key swing point on the daily. I would be interested in a level like that if we really accelerated through there and had a lot of space. But no, on a quick pullback, I wouldn't be interested in that. So gold looking a little bit healthier here. As I said before, that was the level. That's the level you got to watch. It's the last high pre-break again. So it breaks a swing high, little rounded retest. That's key. And you want to see it hold there. You want to see it react off there and then start pushing to new highs. I mean, obviously we're not going to get any real upside resolution even if the trade works out until PPI comes out. I'm fairly certain of that. But it's looking better than it did when it first came into this level and just started crossing through it. What's your role in prop? Are you trading capital for them or just mentoring? No, I'm not doing any mentoring. I'm trading their capital and I'm running the desk, which basically means running the risk, calling people cunts from time to time. That's what I'm doing there. No, it's a nice little team. There's some really great traders on there and we collaborate a lot. It's good to be part of a team. It's been a long time since I was in prop. Trading on your own, which I've done for years, it's a very insular career. You don't talk to a lot of people unless you're on social media or you've got a little network even off social media like on WhatsApp or something. And it's just very easy to get in your own world and your own thoughts, which is good when you're a trader, but it can get lonely. It's nice to have a team of people that you can chat to in the day that you know are good traders, that are trading real capital, that are trading in size, and that are professionals. The problem with a lot of groups that you see online is that you never know who's really making money and who's not. And the second issue you get is a lot of people that join these groups don't collaborate. They just look at what everybody else is doing and copy it. And that collaboration is nice. It's nice to have a team of people that you can trust and you can say, I've been looking at these stats. Can you peer review them for me, for example? Going back to Nav and Bradley Young, who are the two biggest ballers at Futex. And if you haven't read Flash Crash by Liam Vaughan, you really should read it. It's a fantastic read. But there's a good example of collaboration there. Nav was an ES trader and Bradley was a DAX trader, and they were two huge traders. They sat several desks apart, but it was during the financial crisis. The market was collapsing each day, and Bradley saw that there was someone coming in at the close in the DAX and just sitting on the bid and just would not let it go lower. And he alerted Nav to that, and they watched this, and then they both started to take advantage of it. And they'd noticed that someone would sit on the bid, take everything, and then the very next morning it would just collapse straight through them. And the same thing would happen the next evening. Someone would be sitting on the bid against the order flow, taking everything, and then it would just go straight through them the next morning when it opened. So they spotted this very short-term pattern. They went absolutely balls deep on it, shorting into this person that was holding price, and then getting out on the next move lower in the morning. And that's how Nav grew very quickly overnight. He just took these huge positions based on what he'd noticed that Bradley had alerted him to, and it elevated him massively to trading much bigger size in a short space of time. So it's a good example of collaboration, and they didn't know this at the time, but that person that they were taking the other side of was Jerome Curviel. I don't know if I pronounced his name right, but you can Google it. He was the SocGen rogue trader. You know, when you're on a desk with traders that you absolutely know are making money, sometimes someone will alert you to something and say, hey, look at this. It's not, oh, hey, I've noticed this great trade. This is where you should go in with entry, stop, and target. But it's more, hey, look at this. Isn't this interesting? What do you think of this? And it might be a market that you haven't looked at before. A lot of big traders do trade off of short-term order flow phenomenon that they've noticed. When you look around on social media these days, everyone seems obsessed with back testing everything. So you could say to someone, oh, I've noticed in the short term, someone's holding up the DAX every night and then it collapses the next morning. And some cunt will go, I'm going to go and back test that over 10 years. Nah, it doesn't work. It doesn't work taking a position into the close and getting out the next morning. Nah, there's no edge in that. But that's not what these guys do. There's no fucking way Nav pulled up an Excel sheet and started fucking back testing 10 years of data to see if there was edge in it. It was like, this is happening right now. Someone's clearly getting caught. They were caught yesterday. They were caught the day before that. You can see it on the order book. Let's take the other side of it because it will be here today and gone tomorrow. And that's exactly what happened. It was there for a few days. It was gone. Which is not to say there's anything wrong with back testing things. I will go back and look at what's the probability of price returning to the open? What's the probability of price returning to the open drive? What's the probability of a gap fill? All of these things. But there is a difference between that and then short-term order flow. This is happening right now and it looks really good. And I noticed it yesterday. It doesn't need to have worked forever for you to make money from it. I can't see anything that I want to do within the next 15 minutes, Ledges, so I might call it here. The last thing before we go, look at this New Zealand dollar. We knew it could come down here because this level's important on the daily time frame. It is the low of the day before this hammer and inside day failure. So it is an important level, but you want to see it react off of here. You want to see bullish price action. We're 10 minutes before the close and there's nothing to take away from this. No kind of reversal candle here whatsoever. Just be fucking patient and wait. Because something will come along like BTC yesterday. And when it does, you're looking at an easy trade that doesn't fuck about, that moves straight to target, that you've got a nice plan that you're confident in ahead of time. And then all you've got to concentrate on is not fucking it up. Not second guessing yourself and missing it. Not getting out too early to the guy that got out too fucking early. Said he got scared. No one's getting scared. Scared of what, man? Just accept the risk. Just accept the risk at the outset and tell yourself that this will probably stop me out. That negative visualization trick has worked for me so well over the years. Just get in and go, this is probably going to go wrong. Imagine it in your head. This is how much I'm going to lose. Oh, I can see those fucking red candles moving right to my stop. Damn, they've stopped me out. Oh well. And then just pull the trigger. Then you've made peace with it. Some people have said to me over the years, no, you can't do that, man, because if you visualize a loser, it will end up being a loser. Fuck off. It's all about controlling mindset. You've just got to do what works for you to control your mindset so you don't get emotional, you don't get scared. Have your plan and just stick to it. I know it's easier said than done, but you've got to do it. You've absolutely got to do it if you want longevity in this career. Is the new LLPB a good target? Well, up here in BTC, mate, you should be out of this already, in my opinion. You really should be out of this. That's not to say it won't run higher, but the easy play's been made. One level to the next. Get in here. It's run the stops on the other side of the inside day. That was the easy money. Now it's, oh, it might go higher. Yeah, it might do. Might pull back in this range as well. It's not clear to me. Wait for people to get trapped right underneath an inside day low into old highs. Just take their money off them and get out. We are robbing people here. Very early on in my career, my trade that I had was in wheat that worked exceptionally well, that I've spoken about before. And I mentioned this to my landlady at the time. I was renting a flat in North London, and she was very opinionated, very politically minded, and I was telling her about wheat and how I'd been buying it, and fuck me, she went off on one. I was like, I've done really well, I've bought wheat, I've made a lot of money with it, and she was like, it's disgusting. It's absolutely disgusting. Do you know how many people are starving in the world while people like you inflate prices for everyone? What good is a trader anyway? Like, what good do you do the world? I was like, oh, I wish I'd never opened my fucking mouth now. We're greasing the wheels of the economy, that's what we're doing. There's not a whole lot of job satisfaction apart from the fact that, you're fucking somebody else over. That's why I'm going to go and find missing people one day. There's some job satisfaction in that. Although, as someone reminded me the other day, what if the person you're looking for doesn't want to be found, Tom? What if you find them and then you ruin their life? Oh, fuck me. Can't do anything these days without upsetting somebody. Anyway, I'm out of here, ledges. Back at 2.